They have too many houses. They are literally tearing them down to try and bolster the housing market there. They're just manipulating it. Like, they're literally playing like SimCity. Like, cut these things, throw people in jail. Like, you're just like, it's literally that, but it's real life.
You know, they're going to go extreme. If they have to tear down...
They have plans for 75 million apartments to go down.
How many?
The homes for 75 million people. So they maybe, back to two people per home, so maybe 35 million apartments are going to come down.
Holy man.
When I was broke, I had rich habits. When I was broke, I had rich habits.
All right. Welcome to the Master Keys podcast. I'm Chandler Haliburton.
I'm Neal and Andreino.
Master Keys podcast is a real estate investment podcast here in Atlantic, Canada. Number one in Atlantic, Canada. We are real estate agents and investors ourselves. We sold about $400 million plus worth of real estate, and we have a combined 200 plus units worth tens of millions of dollars. So we're doing this every day, and that's why we've got this program here to hopefully share some of that information with you guys. Neal, what's going on?
Yeah, to help you guys. There's another thing I want to add is help you guys grow your portfolio. So hopefully we can add some stuff. We always say or send us a comment, send us a message of what you want us to talk about, because we're trying to help you guys grow. We were in a position where we grew on our own, and so we tried to make this to help it so people could grow with other people. And we're building a community page that'll eventually get released where you guys can kind of all network with each other and kind of help each other grow their businesses. Yeah,
so as always, like, follow, subscribe. If you find anything of interest here, don't forget to hit us up in the comments with questions. Crazy topics this week. We're going to continue to tackle the situation in China where they're literally demolishing mass blocks of real estate just to try to save their butts from the pending doom. So we're going to unpack
contrary
that.
To Canada.
Yeah, and we're going to see how that is going to influence or impact us even further. We're also going to talk about big story out there, the debt forgiveness, student debt forgiveness down the States. Could that possibly be coming to Canada? And what do we even feel about this?
Biden's throwing that cash.
He's throwing that cash around. I'm still processing that and how I feel about it. And then lastly, we're going to go into, like you mentioned, this is about bringing it home and thinking about how all this stuff is impacting us, the Canadian market. What are our predictions for Q4? If you're an investor, if you're a homeowner, you need to listen and be part of this conversation as we start thinking about what the predictions will be for Q4 and
what the experts are saying.
Yeah, what are the experts saying, man?
That's what we want to know. So we got all that stuff here for you guys. So before we jump into it, I want to say thanks, everyone. We hit the 100 likes on that episode. We asked you guys for it. So we're going to do the conspiracy episode next week. Chandler and I have lots of things brewing. We're back and forth in our DMs with all sorts of random
Get the tinfoil
crazy
caps
ideas.
ready,
Yeah,
baby.
exactly. We should definitely wear tinfoil caps for that. This episode, we're going to do another thing. So we're going to go for 100 likes again, guys, if you can do that. If we hit 100, we're going to randomly select one person, give them $100.
Boom.
And
boom.
Yeah, look at that. That skrill, that cheddar. And 1 free month on the Patreon. So please do it. We're going to try and pick somebody by the end of the week. So let's do a little faster this time. And again, thanks for it. We're also going to pick somebody from this last 100. We said we're going to give them a phone call and chat about their portfolio or their investing journey.
Yeah, we're actually going to announce that on today's episode. Brad's going to hit us up with the name of the person randomly selected that we're going to connect with you and talk shop, talk real estate, talk whatever you want. Thanks so much. If you're listening to this on Spotify or Apple, what's it called? Apple Podcasts?
Apple Podcasts. Come on.
Wherever you're listening to it, if you can hop onto YouTube for 2 seconds, hit that like. You can see, man, we're trying to, the algo, man, we're slaves to the algorithm. Oh, yeah. But when you guys like this, it really helps our exposure. It helps grow the community. And again, this time, you're going to $100 and a free month subscription to the Patreon where there's all this extra wicked information. So please hit that like button. We really appreciate you guys. And we're going to do this week. It's got to happen in 1 week.
Next time for our episode where we talk about how to get your first down payment, it's just going to be liking all the Master Keys videos.
That's right. That's right. You can just mass like and
anyways,
$100 at a time.
Let's jump into it. First piece of news I want to chat about is Mark Zuckerberg.
Your boy, two of your favorite boys.
Your boy.
Together.
All of my boys on Joe Rogan's podcast chatting about Meta because it's been kind of a dull point for a lot of people. It was all the hype. It was up 200% every week. And now it's doing quite the opposite. And it's plummeting. And again, last week it went down another 20%. Mark was on there talking all things about what it's going to be. He's talking about how things are going to be holograms in real life. But one of the crazy ones that I thought that he was talking about, and this makes sense because it's been so cartoony. I think that's what's been holding a lot of people back.
Yeah, and he's a cartoony dude to be trying to usher in this thing.
He's a cartoony
weirdo,
dude. He is a bit of a weirdo. But I think a lot of people look at it as a game. Like everyone's like, I'm not going to go in the metaverse. Like it's a joke. But he's talking about they've spent $5 billion now designing new headsets, well, and a bunch of other things, but new headsets that are going to record your facial expressions and then put them on the people, like your avatars, within the game, which is like literally like the movie Avatar. If you remember correctly, they would go in those tubes and then they would get like rebuilt, and it would follow all of his facial expressions and do that within the avatar world. And so they're looking to do that now with the new headsets, which will make it hopefully a lot more realistic.
And this is a key. This is them trying to get back to the news cycle. I don't know, man. Is Facebook kind of dead?
No, I don't think so. I think there's a lot of emerging markets where people are still just getting onto it. I think the older generation, like a lot of the probably 40, 50 plus, like they're all on Facebook. And again, that's a big spending market. Like I look at...
It's not as big as the under 40 spending market.
No, but I would say the ratio of spend for those people, like when they're on there, is higher. I think per person, it's definitely higher because like you look at like, and they're also like targeted ads, right? Like when you look at what an ad's worth to them, like it's actually going to have an impact. And then Facebook's not just Facebook, right? They own Instagram, which owns...
I know, but like is Instagram's kind of struggling a little bit too?
Yeah, but when TikTok gets banned, Instagram will pop off.
Is TikTok going to be banned? So these are the questions. Is TikTok going to be banned? I don't know.
Instagram's doing pretty good, I think. And
but
then
he's put a lot in this metaverse thing.
He has delved like completely. Like this is their focus. I mean, they've renamed to Meta, and they are going full into it. The scary thing is, I don't think anyone totally understands the Meta, and not anyone, but I think a lot of people don't. And I think what Facebook or Meta is trying to do is being kind of the governing body and kind of the unlawful owner of the metaverse and a lot of the space.
The access point, because they know that if this thing builds out, be like, all right, how can I easily access this and navigate between these two things? Well, wouldn't Facebook be a really easy door into this space? And, all those boomers who are on Facebook, all of a sudden he's going to be like, oh, you're also in the metaverse. And be like, what? I didn't know I was going to be on this thing. It's like, no, you just are now. Right? So it's an immediate population dump into that space. But what were they talking about? Just typing it up. Yeah,
so he was basically, like I said, he was trying to go over all the things that are going to be available. So like they said, they spent $5 billion last year in combating disinformation. So just on like basically publicizing the truth. These new VR headsets, they say they're having a similar penetration rate that PlayStation and Xbox did when they first came out. And then he talked about how a lot of things will be holograms, and they're fixing a lot of like different, just everything, trying to cover it all and reduce, I guess, the misinformation and increase the confidence in it. Like I said, the biggest thing for me is I just saw those headsets where they're going to record your face and paint it on there, and I was like, holy God, this is so sketchy. But in some ways, it's going to be kind of neat. It could be really, really cool. And like I think I truly believe that it's going to take over. Like I am a strong believer they'll take over because you can reinvent yourself there. Work from home will be so much easier. Like that's going to be the thing. Like work from home, and obviously as agents and just previewing properties, and the idea of like, all right, what if I wanted to go down south and look at a property? I'm not going to fly down there. I could actually just go down there. And these virtual tours are getting pretty damn good as it is, and that's sort of a meta experience. But imagine if you could actually walk through the space truly. Like some of these tours that you can get now are incredible, but the meta version of it could even be just that much better, especially if it could somehow be replicated almost like live. I was thinking about like sports events. Like why is there not just like a meta live stream from courtside at Madison Square Garden, right? Like you could be sitting there and they could just have this thing where you're beside Spike. That's going to pull a lot of people in.
Oh man, like that I think is untapped there. But then it's like, well, then why would you actually go to the event live? And this is my sort of thing. And you can look at this in a lot of similarities to like super realism in art. Like it got to the point where artists were getting so good at recreating reality that's like, well, if you're going to make it the exact same, why not just take a photo? Obviously, like there's the skilled component of the painting, but that's also why some of this push against that, be it like pop art or like avant-garde or expressionism or whatever it was, evolved out of the fact of if you're just going to recreate it exactly, why do we even need that if it already kind of exists and doing something more abstract and different? So I don't know, man, that stuff's weird.
We don't digress too far, but a couple things. When you're going to a sporting event, the cost is enormous. There's a reason people watch them on TV. There's a reason people do pay-per-view. The other thing is, the big one for me is everyone's like, why would I want to spend my social time on there? But we already do. When we play video games, like I know lots of groups of guys that get together and that are in their 20s and 30s. They play games to be social, and if you can now do it at a higher level, it makes a ton of sense.
I showed a property last night, and it's always awkward when it's tenant occupied. What's that?
Even a showing.
Well, even a showing could be done that in the metaverse. But I did a showing last night, and it was tenant occupied, so they were all there. And like the dad was posted up doing some sort of first person experiential game. I don't know if it was Warcraft or I don't know what he's doing. I don't game. But he was doing something. He was in the zone, just ignoring me as I walked through their space. And then the kid was in his bedroom doing the same thing.
Yeah.
Right. Like, so this is multiple generations that were just ignoring me, ignoring the rest of their family, ignoring everything that was going on, and just walking through these virtual spaces. So,
but if they're playing games together in some ways, yeah, it's not the same as playing
bonding.
Yeah, it's not the same as throwing
catch.
Yeah, but like it's still a bonding in some ways. But anyways,
Dad, you never play online with me. Anyway, all right.
Let's get into some actual real estate stuff. What do you got?
Do you want to go through our news topics?
Yeah, let's do.
This one is kind of on a lighter note. The harbor hopper, or not the harbor hopper, Theodore tugboat, who is near and dear to us Nova Scotians.
Now he's in Ontario.
He's in Hamilton Harbor right now.
Afro and Yeezys.
And he's going up on Airbnb.
No way.
Dead serious. Theodore tugboat in Hamilton Harbor is going on Airbnb.
I'm probably gonna go.
It's sleeps up to 5, 3 bedrooms.
3 bedrooms.
Yeah, man, these tugboats are pretty big, man. They're not tiny.
I know.
3 bedrooms. One of them has a set of bunk beds.
I may have inebriatedly snuck onto it one night.
That's amazing. And it's actually starting, because it is the Theodore 2. It's going to be starting at $22 a night, which is really reasonable. And it's actually part of a charitable endeavor. Like, that money's going towards a charity. But as Nova Scotians, that stings a little bit. Right? You know, first of all, we lost Theodore to begin with. And then now he's just going to be there.
He's going to be parked.
Being just
within a couple of years, he's going to be done. I'll tell you right now. This is the beginning of the end. $22 a night, that's not even going to cover the maintenance.
Yeah.
There's no profits left to give away.
Yeah, I think they also will do like a boat tour with it. So again, I think it's part of a charity push, but it's good to check in on our boy Theodore out there doing big things.
Okay, well, I got another lighthearted one I'll give you.
Yeah.
A Minnesota realtor is suing a Hamilton realtor.
Hamilton is the Hammer. Shout out to the Hammer if you're from Hamilton. Like, comment, subscribe.
He is. Guess what he's suing him for?
I bet it's like copyright infringement because they're both realtors advertising the same way.
Yes, exactly.
Oh my god, I know.
So
that's so petty, man.
I read.
No, I didn't actually. But that's
guess what the thing is. It is the way his pose.
Shut up.
So the Minnesota realtor has a pose. Are you ready for this?
Yeah. If you guys can't
have to
see
watch
this,
the video.
Neil just has his arms out.
I have my arms stretched out. That is the pose. I'm doing it right now.
So
I blur it. Actually, we can't do this. We're gonna get.
So the realtor in Minnesota says that that's his pose, and
That's
the realtor
his
in
pose.
Hamilton is copying the same pose.
Yes.
And the pose is essentially just the, I mean,
Don't look too long.
yeah. Man.
Now I will say, digging into it a little further, the Hamilton realtor went to a seminar of this Minnesota realtor guy's thing, and so he saw it, I guess, in the seminar, and then he started using it in his branding. But it's pretty funny. And
Just going like that, eh?
Yeah, but the Minnesota guy does have this plastered on the sides of buses.
Really, man. It's hard to lock in a pose like that. I think that'd be a hard thing to copyright, especially one as generic as that.
I'm gonna do one of our thumbnail ones like this.
Yeah, I know that. You stole that from Macaulay Culkin. Man, on a slightly darker note, I don't know if you saw this here in Nova Scotia. A tenant was just sentenced to 7 years in the death of their landlord.
I did, and to be honest with you, I didn't read all of it, but I don't think 7 years is long enough.
No, so well,
I don't know the whole story.
Yeah, so here's the context of the story. The landlord was actually renting these two folks a room in his own house, and they had an altercation over unpaid rent. I guess the landlord left the house and was walking away. The tenants who were intoxicated got in their car and were driving after him, yelling at him, trying to get him to come back to the house. A further argument ensued, and according to the statement by this individual who's now going to spend 7 years in prison, he tried to swerve his car just to psych out the landlord, but because it was icy, accidentally drove over the landlord. And so, it's a terrible situation, and I know that the reason the sentence was so light is because the guy was, full of remorse and it was deemed to be accidental. But
7 years seems really short.
It seems awfully short.
Really short. I'm not necessarily one that's like, hey, give him a life sentence, because I understand it could be a mistake, but 7's like, you're 25, you run over a dude, and then you're up 32, and you're ready to just keep going. You did your time. I don't know. Like, that's...
Man, a couple people sent this to me. Shout out to Bill. He's one of the people that sent it to me. But someone else sent it to me, and they're like, man, Do you think this is because people hate landlords so much? Like, not the actual killing, but the lightness of the sentence.
That's what I said. The second you sent that to me, I said, I bet you partially because he's a landlord, they were like, well, but
oh my god,
and not actually, but like to an extent, I feel like it lightly plays in your mental decision. Like I honestly really do.
Yeah.
One thing I will say to anyone who is a landlord, it's not worth like going nuts for the rent. Like I say,
totally.
All of my guys, like if we're having an issue, just back off, follow the set rules. And if it gets to that point, like the police or sheriffs or whatever it need be, it's not worth the rent. Like,
man, this guy was renting a bedroom in, I can't remember, maybe Port Hawkesbury. I can't even remember. We're probably talking like a couple $100. Man, and now someone's in. It was interesting the wording they chose because it seems like these were more roommates. But perhaps because of everything that's going on, like they specifically identified as landlord tenant, but they obviously were living in the same space. It was kind of more of a roommate setup. But
that's sketchy.
Anyway, so yeah.
Okay, well, I'm gonna stay on the dark note.
Cheering. Oh, okay, good.
Not quite.
We're leaning into it.
That was pretty hard. That was pretty dark. But Reality, which probably I'd never heard of, but it was a startup company that had a business basically in California. I think it was a startup out of Israel. They operated in California, and their whole business model was that you could go out and shop for a house.
Okay.
And as a buyer, assuming you already owned a house, and they would give you cash to buy the home because the market's so competitive. They'd say, we would give you the cash to buy your house. So you'd buy your next house with cash, and then they would help you sell your previous home to pay them back.
Okay.
Now, it was growing like mad.
No, that would have been a great model for a short period of time.
Well, and so basically the idea was that they would check and see what your house was worth, make sure you had the equity in it to actually pay them out, and then you would go out and buy the next home. And the idea was that you could, their logic was you could save on your next purchase because first of all, you're more competitive, and oftentimes lower price cash bids actually get accepted over
100%,
none. So they were like, you can save money there. It takes away a lot of the stress. And then they also had a lot of things to help you sell your home on the back end. And they actually got into $100 million valuation at 140 employees. Anyways, they just folded up shop.
Man.
And
that's a pretty quick turnaround from we're worth $100 million and we got 140 employees to we're worth nothing and we're shutting her down.
Yeah.
And man, a lot of these startups in the real estate space, man, they do great in big markets and they slow down as the market slows.
Well, and the one thing I think that you see with a lot of the startups in the real estate market is it's really like in startup world, it's all about your numbers, like revenue and this and that. Well, when they talk about the amount of money that they lend or the numbers that they do, it's like, oh yeah, we did 100 million, and you're like, holy crap. That's 100 houses.
Yeah, in some markets,
which is not
that crazy.
In California, that's 100 houses, likely, if not less. You know what I mean?
Yeah, that's true.
So it's like that's not crazy. One agent, you do more than that in a year.
Yeah.
So it's like, do you get $100 million valuation as an agent? No.
I should.
Yeah. Shout out all those investors if you're looking for your next
shares in my life.
But don't joke about that. That's gonna be a thing someday. Anyways, but yeah, so I just thought that was interesting because we've had some startups on here before, and there's always so many things that you see that are so hype and exciting that there's this new thing that's growing and exploding. And they cited basically that with reduced volume, new market conditions, interest rates, everything going on, that it wasn't favorable for them to keep going. But I also struggled to see where they were going to be able to make a fair bit of cash during the process. And especially if they're relying on, it worked really well when everything's going up because they buy the next house. They assume you're going to get out of your house in a quick timeline. Yeah. And you're going to make profit on your previous home. But when house prices are dropping, like they buy a house and then the previous house is worth less and the house they just bought is worth less, they're actually really got to hope there's a ton of equity there to cover both ends of that. Yeah,
also
deal.
That whole model too is based on speed, right? Like how quickly can they turn these properties over? And for now 6 months in a row, the volume of home sales in the States is down. 6 months in a row, right? So the homes are sitting on the market longer and longer. And when you've got that sort of money extended out there, you're really exposed to risk. It doesn't take long for that to turn sideways, and it turns sideways. No real surprise there.
You're stretching your arms out kind of wide. I don't want
you
to
I'm infringing on a copyright
laws.
Keep them in tight. Keep them in tight.
Oh, we're getting a little water delivery. Thank you, sir.
Yeah.
So
you want to get into our bigger topic. So
let's get into some real shit here.
We popped off at the beginning there with the metaverse. Again, we're running this promotion right now where if this video gets 100 likes, one of the people who like it is going to be randomly selected to get $100 and to get a free month on our Patreon. So if you're listening to this point, give it a like. If you're on Spotify or Apple Podcasts, pop over on the YouTube, give it a like, enter into the draw, $100. and a month of Patreon. So I want to turn now, man, if I can, here to the Chinese situation. Everything's going on with their economy. It's not good news, and I've been stressing this, and I think it's really important for people to be at least up to date on what's going on over there, because it is going to impact us. They're the second biggest economic powerhouse in the world based on GDP. They're also our second biggest trading partner. Like Canada's second biggest trading partner, both import and export, is China. In 2020, it was something like I think we exported like 25 billion to China, and we imported like 75 billion. Like that is a huge amount. And that actually grew during the pandemic. It didn't contract during the pandemic. It actually grew. So they are a major trading partner for us, as they are with the entire rest of the world. So there's definitely a bunch of products that come into Canada that one way or the other originate in China, because they are a producer of input items.
A ton of immigrants too. They have a lot of people that move from China that move here.
Yeah, totally. So, and that could have the counter impact, because I think a lot of them are going to be trying to get out of China and trying to get their money here to Canada, which could be beneficial to us. But in the short term, their challenges are going to become our challenges. And the hits keep coming for China. Most recently, and this is an issue over in Europe too, these massive droughts. Right. And they rely on a lot of like hydroelectricity over there, especially in some of their industrial provinces that are effectively big manufacturing hubs for the entire world. And they're now having to do rolling blackouts, both at factories and for individuals, individual homeowners and small businesses and everything. So their consumer confidence is already in the toilet. Their businesses are already
hemorrhaging. Everyone knows like a rolling blackout is when they're literally shutting all the power off. So just imagine that you don't have power for a certain amount of hours every day.
This is something that's hard for us to fathom here.
Doesn't even make sense.
But they just turn off the power switch. And in a factory, well, that means production grinds to a halt for an extended period of time. It means that people aren't there spending money in their local economy. Like that has catastrophic impacts for them locally, and then when it reaches the manufacturing hub, it crushes us. And it's going to trickle down over here. It's already started, and that comes on top of all of the property stuff that we already have been speaking about.
It's insanity. The one thing I want to point out, though, like just that you said about the immigration, the reason I think it would freeze up is not because people want to leave, but the Chinese government, to keep their economy alive, will put a lockdown on people leaving. Well, it's like, you can leave, but all your money is frozen. They're already doing that, where all your money is frozen in the country. So it's like
when those countries charge you money to leave when you're at the resort. You're going to get back on your plane. Like, that'll be $200, please. Damn it. Yeah, they have big taxes on leaving that country.
The big thing, and you mentioned this earlier, that I thought was really, really interesting, and I was just reading about it, is like to fix their, like we have an inventory crisis where we don't have enough homes. They have too many houses, and they're not accomplishing all of the projects that need to be finished. So they've now started tearing them down. So their buildings that they had halfway finished or started and things like that, they are literally tearing them down to try and bolster the housing market there, which just sounds insane. And the thing that I'm just not registering in my dome is who's paying? Like, didn't a developer spend the money to build the building, and then they're like, all right, we're just going to tear this down now.
So, this is wild.
It's housing for 75 million people. It's not just like one building.
There's a pretty cool video circulating out there right now where they simultaneously demolish 15 high-rises at the same time, and they just all crumble together. It's incredible. Yeah. So basically, the idea here is that the market is now so oversaturated with these half-built structures that it's crippling the value of built homes. And we've seen this here in North America. I've talked about this before, I think, on the show. Detroit, when Detroit really collapsed, like, I don't know if some of these people have been to Detroit or not. Have you been to Detroit?
I haven't. No.
I went through. I could not believe it, but it got to the point where housing was so cheap, and this was when all their factories closed there. All their car manufacturing dried up, and Detroit, as a municipality, filed for bankruptcy. Their houses were so cheap that if you were a person trying to sell your home, the problem was your neighboring house was vacant and being sold for $7,000. And 2 doors down, another house was vacant and being sold for $4,000. So how are you trying to sell your home for $40,000? And those are real numbers. This is how cheap this stuff was. So the city then went around and started demolishing all the abandoned houses to prop up the value of existing structures. And I was down there, and it was amazing. You'd have like occupied house, vacant, boarded up house, empty lot, occupied house, empty lot, boarded up house. Like, it was unreal. And it's the same sort of model that's happening right now in China. They are making this plan. Like, the government has actually seized the assets of Evergrande and some of these other big companies and is trying to figure out what to do with their projects. And they're realizing that for the good of the market stability and the value of people who already own stock, they're going to demolish a lot of these buildings.
So in both of those scenarios, is the government buying the property?
Oh, in this case, I mean, because of Evergrande's situation, they've taken it. Their assets have been seized.
Evergrande's like upside down, like massively. So they're just basically taking over their stuff. In Detroit, were they buying the properties?
The properties had been effectively abandoned, foreclosed on, and then they're gone.
Tax repoed.
Yeah, they would be probably equivalent here of like public trustee at that point.
Interesting.
Right? And there's also the other issues, like they become, potentially dangerous with squatter situations, fires, etc. And this is part of the argument that they're making in China as well, is that these things are big environmental hazards just sitting there.
Yeah.
So they're going to reduce them to rubble. And the biggest one that's coming down the pipeline is in like this province. I'm going to butcher the pronunciation of this. The Hainan province, which is sort of like a beachfront Hawaiian sort of like vibe. Like it's a big destination. So Evergrande launched this massive project where they built an artificial island, and with resorts and amusement parks and all this stuff. But there is an entire spread of apartment buildings that are going to be demolished. It's 39 buildings in total. And interestingly, the mayor who backed this project and passed it and all these things is now in jail for bribery for the rest of his life because they take stuff seriously over in China. So that mayor who approved that project took bribes in order to get it across the finish line. We spoke about the corruption over there as well. He's now in prison for life, but they are going to demolish.
Such an intense system, man. It's just like,
oh, it's wild, man.
People are buying their way through stuff. They're throwing up buildings left, right, and center. Then they're like, oh, we did too many, so we're tearing them back down. They're just manipulating it. Like, they're literally playing like SimCity. Like, when this is what you do in SimCity. Like, it's going to shit, and you're like, oh, crap. Cut these things, cut these things. Throw people in jail. Like, you're just like, it's literally that, but it's real life.
And like you talked about, like, it is the definition of wasteful spending. Like, all of this money that was invested in there, I mean, and now they're going to turn it to rubble. It's almost 3,000 apartments. Total.
Basically, need to start eliminating debt. This is where they're...
Yeah.
Yeah. And
then valued at over $1 billion. And they're just going to knock it all down.
That one project. Yeah.
Yeah. So this is what they're having to do to prop up their dying economy.
They've also started to cut rates.
Oh, they've been cutting rates, which is counter to literally the rest of the world because they're trying to get consumers out there confident. But you can understand that consumers aren't confident. Can you imagine being a homeowner right now that, say, has a half-completed project that you've been paying a mortgage on? Because we talked about in a previous episode, you pay a mortgage on this place before it's even built, sometimes years before it's built, and now they're running around tearing some of them down?
If I was in China, I'd be buying land. Contrary play, it's time to buy.
Oh, my gosh.
When everyone's running... and they're doing this and they're giving it away and they're tearing shit down, you got to get in there. Because at some point, China's not messing around. They're going to get to the point where the inventory is back to normal and things are popping off.
Well, they aren't afraid to do the hard, unpopular things out there. And people may not like that comment, but we kind of, dance around the subject and we do these kind of half measures. They go extreme over there.
Nuts.
So, they're going to go extreme. If they have to tear down, 100,000 buildings, they'll probably do it, rightly or wrongly.
They have plans for 75 million apartments to go down.
How many?
The homes for 75 million people. So they maybe back as two people per home. So maybe 35 million apartments are going to come down.
Holy man! So
they're going to be tearing down for a bit.
And that is the second biggest economy in the world, and our second biggest trading partner. So that matters. It matters.
Yeah.
And our biggest trading partner.
China's tearing down tower blocks and pausing construction on buildings that could house 75 million people.
Crazy.
That's
crazy.
Twice of Canada. That's all of Canada's real estate's just demolished.
Man, that's
over.
wild. That's wild.
But
Thanks for listening to this point. Do not forget, please, to like and follow and subscribe. We got that big promotion on. If we hit 100 likes, someone's getting $100 and a free month on Patreon. But now we're going to switch. We're going to talk about the student debt forgiveness down the States. It's a big topic. It could impact us here in Canada if they kind of bring the same idea up here. I know there's going to be a lot of people lobbying for that. And then we go in to talk about what's going on in the market and what our predictions are for the rest of this year, what some experts are saying, and whether or not we agree with that.
The one I'm interested in, and I think is really neat that we're going to talk about now, is student debt forgiveness in the States.
Well, yeah, speaking of like trying to sort out massive hemorrhaging debt.
We'll talk about Canada at the end. We have like our interest in why we think Canada's Q4 may stay alive.
Yeah.
But let's talk about this really quick because I think this is an interesting one.
Yeah, this has been huge in the news. And of course, it's happening in our neighbor to the south, so it's going to trickle in and get some people thinking here in Canada. Biden had promised this during his campaigning that there was going to be debt relief for student loans, and it has been passed. So it's going to be $10,000 worth of loan forgiveness on student debt for people out there that are earning less than $125K, and upwards of 20,000 people for individuals who got this certain type. I think it's called a Pell Grant that was more for lower income applicants to begin with, and they'll get $20,000. They're also going to cap.
Let's pause for a quick second because there's like a million things he's put into play. One thing I want to say, just so everyone's aware, this is student debt, and in the U.S., there's 45 million people carrying student debt, including senior citizens. It goes across the entire range for a total value of $1.6 trillion.
I'll go a little further, including dead people, because your student debt survives your death.
Including dead people. 1/3 of the people with student debt never finish their degree because they didn't have enough money to get through the process and it was just continuing on. 16% of them are in default. So these are people basically going bankrupt and they are carrying their student debt. It's not necessarily directly caused by that, but it's a contributing factor. So this is how big of an issue it is in the States. It's an issue here in Canada as well, but in the States it is way, way higher just because I think simply the fact of the cost of education there is like probably about 5 times what it is in Canada.
Oh, man, it's insane. Like I was talking to this client who worked at the University of Miami, and this is my ignorance when it comes to the American university market, which is crazy. He said that something like $40,000 to $50,000 US to go to the University of Miami for a year.
Oh yeah, that's
and
crazy at all.
It blew my mind. I couldn't believe it. Yeah,
is that just tuition? There's probably more for like living and stuff like that. Like
I guess I got to work on my football scholarship. But
yeah, to what you're saying, then like Biden is now trying to come up with things to help get people through this and figure out ways because they've said student debt's one of the biggest crises that they face in the States. And so some of these things are, like you're saying, well, I'll let you continue, is what he's putting into place to try and help this issue that they're facing. And then
so basically if you're making less than $125K a year, you get $10,000 relief. There's certain applicants who actually are going to get $20,000 relief. It's also capping student loans at 5%, and there's a moratorium currently on them that's being extended to December 31st. So this is going to take an estimated like 33% of the people who have student loans. It's believed that this $10,000 will actually get them down to $0 owing. So 33% of the people in student debt, this could take them right down to zero. 43 million people will be affected, like as you mentioned. And then about half the people that this debt, this one-time contribution of $10,000 or $20,000 will get their remaining student debt paid off by about half, right? So like this is a pretty significant reduction in student debt, and it works out to be about $2,000 per American because there has been some pushback on it, which is that this is coming from tax dollars, right? Everything comes from somewhere, so this is coming from tax revenue, government spending, and I'm trying to figure out exactly how I feel about it because I wonder, like, if I was someone who just finally paid off my student debt last year. Or someone who made $126,000 a year, I would kind of be like, "Are you kidding me?"
His contract, shit.
But you seem for it.
I am for it. I mean, at the end of the day, if you're always concerned about like people who are going to get missed out on things, you'll never be able to do them. The world continues to improve consistently on every single front, and unfortunately, not everyone's going to be able to get the stuff. It's like I already look at like your kids, and I'm like, they're going to get to experience super cool stuff that I may never have gotten the opportunity to like, and like, I mean, technology wise, I look at like gaming had just started for me and it kind of sucked. Now I look at it and I'm like, metaverse stuff looks like unreal. Like that would have been insanity as a kid. And so like there's just so many things. So like on this same thing, same with the taxes. And I look at like previous generations had the option to do 0% down and buy buildings and different stuff like that. Like
but someone literally like someone maybe busted their butt and either one didn't take on student loans and maybe had other repercussions because of that, right? Totally. Like maybe they had to work 3 jobs for 5 or 6 years to not have student loans. They're not getting $10,000 or $20,000 or maybe someone aggressively paid theirs down and was a great saver and was really like practical and sacrificed.
I'm not saying I don't feel for those people. I'm just saying at the end of the day, like if you always, when you put in, there's always gonna be some people that don't get the benefit that should have gotten the benefit. But when you're dealing with 300 million people, 45 million people being affected by this, like whenever you put any policy in place, there's going to be people who like really maybe don't even deserve it and they're going to win from it. And there's going to be people who totally deserve it and somehow don't qualify.
Yeah. And I'm kind of playing devil's advocate here. But let's also look in the States, it's something like 35 to 40% of people go to university. Yeah. Right. So that means there's still 60 to 65% of the population of the US that's like, yo, we're struggling out here too. True. Right. And, maybe we couldn't have even afforded to go to university.
I would have gone if I'd known you just let me go for free.
Because, man, the university tends to be something that unfortunately more affluent people get to experience. It's also it's disproportionately liberal. Like it's all these things. And again, this is me playing devil's advocate. There's a lot of people struggling out there who maybe didn't go to university and they aren't getting $10,000 towards their debt because they may have visa debt. Like you tell me there aren't people out there that had to take on other arguably worse debt.
Yeah, well, there's also training and stuff that you can do that's not necessarily classified as specific education. Like I'm sure like a realtor's course or like there's different professions and trades that wouldn't necessarily qualify for student loans that they've spent money on that they wouldn't qualify for it. I totally get it. I totally get what you're saying. I guess my thing is they're going for the large percentage, right? And I think there's going to be 20% in any of these kind of policies that are going to get impacted in a way that kind of is it's not negative, but basically I guess it could be looked at as a negative thing.
And all these people who all the time say, oh, we can't remove, like we can't give people a discount on gas or power because all those companies are going to do is just raise their prices by the exact amount of the discount. So there's all these memes floating around where like someone's taking a picture of a bunch of people laughing and it's like all the universities in the US when they raise their tuition by $10,000. Right? Because the university be like, man, we don't care.
You
want to forgive that loan? Cool. As long as we got the money to begin with. And I've talked about this. This was on a long podcast ago. Like I was a professional student for a while and I've become slightly disillusioned with this idea that we sell our young people that university is the be all and end all, because that's what all these kids were sold on, that they had to go to university. And so they had to take on this debt. And now, interestingly, years later, those same people are struggling and, they're paying taxes. And now those debts are going to be forgiven, but maybe those people would rather university have been free in the first place, or that maybe they would have rather that the government didn't hammer them on this debt that basically society told them they had to take on, because those people have the $10,000 now. That's awesome. But how many of them couldn't save for a house, right? Yeah. And wish that they had gotten this relief, say 5, 6, 7, 10 years ago when they would have been able to purchase a home, maybe get married. No, I'm just saying, like...
They could also just not put the policy in at all and not make any effort to do anything, and then you could just never get the $10,000.
It's sort of like, man, we're going to make you sick, and then we're going to give you the cure, and you're going to thank us for the cure.
I mean, they didn't necessarily make you sick, because you made the decision to go. And I understand that now that you need to go...
That you had to, like... Why do you need... Yeah. Anyway,
why do you need to go? Because at the end of the day, like, yeah, the governments are going to incentivize going because it benefits the country, because it allows them to do more research and development, and it educates their population, so they work at a higher level, they're more efficient, they do better jobs, they're better as a country as a whole.
So if that's true, why do they also need to hammer them on the interest rate? If it genuinely has all these benefits, like, then why are they hammering them on the interest rate to begin with?
The interest rate one, that's one that I agree with, that it's kind of tough. Like the student loans, potentially they just make them so that they're completely free and you just got to repay them. Yeah. But it's also a weird one of like, yeah, like I'm thinking that in my head, like if you're paying, basically, because you're paying $50,000. It's not all just going towards the prof and the course. It's going to a lot of back end R&D that those people are doing, where that money is being spent in things that might not directly benefit you.
I
don't
know.
Time,
most major universities in the States, their R&D is sponsored by things like pharmaceutical companies or special interest groups. It's not tuition going to fund that R&D. But anyway, we're getting sidetracked here. I think philosophically, it's hard to find fault with this idea. Debt forgiveness, especially when it comes to things like education, just seems to make sense. Obviously, you got to think this is some sort of form of relief here. It's coming to Canada or there's going to be pressure.
We don't have nearly the issue, though.
That's true.
Not
we
nearly
don't,
the issue. Like, I think we have issues in other places. I don't think they're going to do it. Like, student debt's not something here that I hear people being like, I am crippling, like I'm with crippling student debt and all that. I don't think it's nearly as common because our cost is a fraction of what, like, well, it just plain and simple. Our cost is probably about a quarter, if not less, of what their education system costs.
Yeah.
So if you take the dollar amounts and you crush everyone's by a quarter, then it's going to be a lot less, and a lot more people are going to be able to get it paid off.
It's just, man, this is why, like, student debt is a big part of the reason why people don't buy homes as early. It's a big part of the reason people don't get married and start families as early. And
debt, that's it, totally. The other thing that I was going to add in there that they are talking about doing now is cutting the loan payments in half from. Right now, it's 10% of discretionary income. They're talking about cutting it to 5%. A little bit of an interesting one because
that's I think what that cap is. Yeah.
Yeah, that's a weird one for me because I'm like, you're kind of just going to drag out the payment then still. They're also going to raise the amount of income that's considered non-discretionary so that you have to pay even less, which again, it just continues to drag that out. For what is it called? Community colleges right now, after 20 years, once your loan balance is less than $12,000, they will forgive the loan balance. They're looking to cut that to 10 years. And then this one,
it just kind of goes back to like, so where'd the money come from to begin with? Like, it's just all imaginary money. It's kind of funny.
All is, yeah, exactly. This is all imaginary money.
That's all right. It's all imaginary. It's just numbers. We just move some numbers around, and now we're gonna say those numbers are gone now.
The problem that's weird is I'm like, I feel like the kind of idea of even having the money there is to give some people some, like, put some value on it, create some importance on it. But I think a lot of people go and don't really think that. Like when I was in university, I feel like tons of students are on huge debt-based. Huge loans and debt-based systems,
and they're trying to 4-year,
and they're still just going crazy with it. And I'm like, I don't think the idea of like putting a loan on this is making anyone really like. There's some people that are like, man, I got a huge loan here. Like I'm not messing around. I'm here for business. I'm getting this done. I gotta get this paid off and move on with my life. But I feel like the majority of the population is not thinking that when they're in there. The last one that I felt better about was covering the borrower's unpaid monthly interest. So right now, I feel like the interest is stacking on itself.
Right.
And so they're going to remove that where the interest doesn't end up stacking. So if you don't make the full payment, your interest doesn't go on there, and then you're paying interest on interest that you didn't pay, because then your loan balance just continues to grow. If you start falling behind, then you're just physically impossible to ever get ahead.
Which again, like I've said that from the outside. I don't understand why government is trying to like hammer their own young people on these student debt things, right? Like, you know, so I this is a big digression. Obviously, we're not really in the practice of talking about this sort of political stuff that much.
We're talking about more of the debts in the concept.
Yeah, like this is relevant to young people who, I mean, man, some of those people, they could go back in time and say, yeah, 10 years ago, I wish I sort of just took that money and bought, like, I don't know, 3 properties instead.
Yeah.
Like,
yeah, man. But I mean, depends where you are. Otherwise, if you're in China and you bought 3 properties and they're tearing it down right now, you wouldn't be so happy.
Man, a good buddy of mine, one of the smartest guys I know, he started his real estate empire. And I say an empire because he hit 130 odd doors pretty damn quickly.
He's talking about me.
His partner was was doing some sort of postgraduate work and was eligible for a $40,000 student loan every year that they didn't have to pay a dime on until 2 years after she graduated. And the one condition was, if you used it, we'll give you another one. So every year, they took the $40,000, bought a property. Every year.
Sweet. I knew there was a guy at Dow when this whole pump and dump happened with, what was it, AMC or whatever.
Oh, yeah?
And he lost his student line of credit on there, and he made like $1.2 million or something crazy. Yeah, on the whole GameStop, everything. I was like, man, what a ballsy one to just max out your student line of credit, and then if it didn't hit, like you're like,
it's like,
shit, now I got a full maxed out line of credit, and I'm 2 years into med school, so I'm screwed.
Yeah.
But anyways, let's get into why the experts are saying that Canada is going to continue moving along hunky-dory.
Yeah, before we do that, I just wanted to send a little reminder, if you're bouncing around or if you're just kind of joining us late here, please don't forget to like. We are going to do that $100 and a free month of Patreon for one lucky person. If if we hit 100 likes. So we got to hit 100. Appreciate the support. If you could pop over on YouTube, depending on how you're listening to this, and give a like, we really appreciate it. And now, this is relevant to everyone because I think most people who listen to this show are involved in real estate in one form or the other. There's a lot of doom and gloom out there. There's a lot of uncertainty at the least, but you've come across some things where some experts are saying fourth quarter, the Canadian market is not going to crash the way maybe some people are expecting, and there's some experts kind of lining up on that side of the margin. Unpack that for me.
Yeah, so they gave 3 reasons on why they believe that it's not going to crash. And like the number one thing right off the hop, and we've talked about it a bunch, we've talked about this all over the place, but interest rates. And yes, they're up, but basically what they're saying is we were getting stress tests before. We've been getting stress tests for years, and those are designed to qualify people at these higher rates. Now, it doesn't mean that people necessarily want to be sitting at these higher rates, but it does say that they can still service their debt at the higher rate. Additionally, like everyone's like, well, yeah, it's gone up, let's say more than 200 basis points. It's not everyone that 1%. Like a bunch of people came into this at 2.5%, 3.5%.
Totally. I knew plenty of people that were pumped to lock in at like 2.65, 3.1.
So there's a ton of renewals that are coming up that they're going from 3.1 to 4.25. And it's like that's a bump. It's definitely a bump, but it's not as bad as...
Well, some of those people are locked in for 5 years, first of all. And anyone who locked in pre-pandemic, I mean, if you got a really good rate in like 2008 or 2018 or 2017, what was like a really good rate back then? I don't know. Yeah, 3.5, 3.69.
Yeah,
like that was a really good rate that you were locking into. And so that blip, that change isn't that material. The other thing is, man, we talked about this before. It's something like 67% of Canadians like own a home. But of all the people that own a home, 35% of them have no mortgage at all. Right? So like 1/3 of Canadians out there that own a home, 1/3 of the homes on the street in your neighborhood doesn't even have a mortgage.
Okay, personal question.
Yeah.
Do you have a mortgage on your house?
Do I have a mortgage on my house?
Yeah.
Oh, yeah.
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 Okay.
No, totally. I've got a mortgage on my house, of course.
Okay.
And then it's something like of the remaining, which is the 65% of the people that do have mortgages, it was always around 75% of them that were on a fixed product. Probably because of what's happened the last couple of years, it's more like 65, 70% of them are on a fixed product. Mm-hmm. So that means 30 to 40% of people, at most, of the people that have a mortgage are exposed to these variable increases. So that is a small percentage. That's about, I don't know, less than 1/3 of the people who have a house are actually on a variable product and could be impacted by this.
Yeah.
Right. So it's not the amount that people like, oh my gosh, every homeowner in Canada is experiencing this. It's like, no, that's just not true.
Number 2.
All right. The other reason we're getting back, and Neal's sugars were low, so he's hammering some Oreos.
These are good.
Interesting fact: Oreos are vegan. Yeah, for our vegan listeners, both of them out there.
Shout out. Yeah.
Oreos are vegan.
Shout out to the wife.
Yeah, if you're vegan, hit the like button. Second reason. So the first reason the market's not going to collapse as much as maybe people are thinking is because there are some built-in protections from a rate standpoint. 1, most people aren't on a variable product at all. 2, they've been stress tested, and there's some truth to the stress test thing or not, because in the major markets where people are being stress tested, they've got co-signers. So you're not just stress testing the individual and their ability to pay month to month. You're stress testing their whole friggin' family. So I don't buy the stress test argument as much as I buy the fact that most people don't have a variable rate mortgage. Yeah. What's reason number 2?
Number 2, demand. Unlike China, where they have an extra 100 million houses, if not more.
Yeah, they have excess
We are
supply.
short by millions of homes. And we're continuing every year to be like, let's say we need 1 million houses. Well, we only have starts for 700,000, and we've been continuing down that cycle for a long time, and everyone's seeing that. Everyone knows that. There's a reason that rents are skyrocketing. That is the reason that prices are continuing to rise. Well, at this point, they've slowed the rise, but I feel like they're starting to come back again, and that's what's caused the rise is this inventory thing. So he's saying, with that going on and continued immigration, this is something that's going to stabilize the prices, and they're going to stay, because maybe they won't continue to skyrocket because the cost to buy is more, but like we've talked about before, people aren't going to just start giving away houses because they need somewhere to live. Like, where are they going to go?
I think also, we talk about this all the time. Everyone, when they talk about real estate, the only thing they seem to want to talk about is Vancouver and Toronto. And even if you go into the nuance of those areas, the core areas are still pretty strong. What seems to be getting hit are the peripheral suburban sprawl places that went through the roof. These are seeing the biggest increases in the country. And yeah, now they are pulling back, but the stuff right in the core is still really strong. The other thing you're seeing is maybe like some condo market softening because a lot of those were landlords on variable products. And now, yeah, they're trying to get rid of some of that stock. But if you still want to live in the core in those markets, which are the markets being hardest hit, the demand support for pricing there is still pretty strong. And then if you go to other parts of the country, they didn't have the boom and while things are softening, they're not softening near as much as what you're seeing in some of these areas, which is like 20 to 25% declines, right? Like you might see a 5% here, a 7 to 10 somewhere else, but the big numbers that the media loves, like the 20 to 25, that's in periphery, these suburbs of Toronto and the Fraser Valley area of BC.
I'm going to come at you with some contrary feels here.
Okay.
Because a lot of people are going to be like, oh, you guys are screaming doom and gloom. And I'm not necessarily agreeing with this. I'm saying this with what experts are saying. And this is just my concern. It's something we were just chatting about before we turned the mics on. But they're now saying that Canada is, so we're having all this housing crisis. So on a short term, we're having a housing crisis, ton of immigration, things are going nuts. On a little bit longer term, they're saying we're expected to hit up to maybe 75 million people in Canada by 2068, when the original was 100 million people by 2100. So if you're at 74 million by 2068, like we're going to surpass well over 100 million by 2100.
And is that supposed to make housing cheaper or
no?
Okay, I was going to say.
Well, that's going to continue to push prices up. But my point is that governments are going to start to look at this and they're going to be like, maybe we should relax on the immigration.
Oh, I see what you're saying.
And so they're saying right now, everything's great. Demand's continuing because immigration continues to rise. And right now the government's saying, we're going to continue with immigration. But BOC also said we're going to continue with low rates. And look what they did. So things have to change. And so at some point, they're going to start slowing the immigration dial. And that's like my biggest concern with all this. I'm like, everything's dandios. But anyways, this is in the back of my head. Everything is birthday cake Oreo. Get out of my face.
Everything is dandios? Okay.
This is I'm gonna show it to my mom. She's listening to this. She's definitely the one who said that. I've gotten that from her.
Okay.
But
I like it.
Real talk. That's my one concern with all
this.
this.
You're concerned that because
that immigration at some point they're gonna park it because if no one locally can get an apartment and they're $2,500 a piece.
Yeah. So, and reason 3 that some of these experts though are saying that the market is going to have resiliency and isn't going to crash the way people think is because of demand and immigration, right?
No, number 3 is employment.
Oh, okay.
So the job demand is through the roof.
Okay.
Everyone, like we were talking about as we came in here, the ferry. We have a ferry locally here in Halifax.
Yeah.
They had to cut some of their times because they literally can't get people to drive. And you mentioned you had somebody who joined the transit service here, and they're working 60 hours a week.
He's brand new, and they were like, man, he's had to ask for them to not book him for 60 hours a week.
Yeah. So there's a ton of I've seen a ton of restaurants here that have reduced hours, are not offering products. Multiple stores that are shutting down, again, reduced hours, not shutting down completely, but reduced hours because they can't get the people to keep the places open and run.
And you look into this, those are good paying jobs, man. When you hit the overtime, we're talking $80,000 a year, it would be more to be, to be running the ferry.
Totally.
I bet if you're doing the ferry and you're working overtime, you're north of $100,000 easy.
Construction companies can't get people to work at them. Any business you start in any of these Canadian cities right now, you're inundated with a ton of demand. And so what they're saying is that's propping things up because people are able to keep charging more and making more money.
Which concerns me about the inflation front. And this episode's going to air, I think, around first week of September. We're going to have the inflation numbers for July for August, probably mid-September. Bank of Canada meets on September 6th, if I recall, right? So I'm curious because you're right. Unemployment is still super, super low. Prices are still feeling some upward pressure. So I don't know. We'll see what this yields for
I'd be
inflation.
curious to see what the unemployment number looks like relative to how many unfilled job positions there are.
Right.
I feel like there's a lot of people
that could even be lower in a weird way.
Yeah, honestly, because I think a lot of people could probably be working in some of these positions. So yeah, it's a weird time. So anyways, they're saying that that's strong job growth, which would on the flip side mean they need more immigrants. Right. And so honestly, the other part of me, and I think the stronger part of me, believes that they're going to do stuff to spur construction. That's going to be, I think their
so
biggest
too.
push.
That's coming down the pipeline.
They're putting more incentives in. CMHC made a lot of great programs, but
then it got undercut by the friggin' interest rate. So
exactly, you're seeing it's not enough because all the big guys pulled out and said, look, great, our FCI programs, all these different programs to help us build. still not enough.
Yeah.
To give us the stability and the cost cuttings that we need to get these things up. And so I think like we just said, they're going to come up with something to. I don't know what it's going to be. I don't see the government building the stuff themselves.
It'll be fixed low rates, is what it'll be. It'll be like,
yeah. You think?
And they'll have
to longer AMs, 50-year AMs.
Well, that was already out there.
That's already out there.
Yeah, but
100-year AMs. They have that in a lot of places.
Crazy.
A lot of places in Europe have 100-year AMs.
Yeah. So a few reasons that maybe the market's going to still be strong. I mean, talking here in Halifax, I've still seen a lot of strength. Last week, 40% of the properties still traded above asking price. Noteworthy, though, that was down from about 50% the week before. Mm-hmm. And the average...
At a peak of like 80%.
Yeah. Oh, at its peak, it was like 90%. And the average sale price relative to ask, 99.5, which is actually under 100. Last week, it was just over 100
for a while.
We've been over 100 for almost 3 years. So things are still slowing.
That's a little aggressive.
But still, if you look at that, by any other measure, that's insane. Like people ask, like, "Oh, how's the market?" I hear it's slowing down. I'm like, "Yeah, it's still the third craziest market ever in the history of the city."
Yeah. Oh yeah.
Right. So there's still a lot of strength there.
Yeah, we had a bunch of listings this week that had multiple offers, and we did good. So what do you got personally going on?
Personally, man, just like plugging away at those units.
No one else
I think I've mentioned a bunch of times that I've got 16 units under renovation right now. I've started ordering countertops and appliances, which is always a good sign because it means you're getting close to the end on a couple of the units. Mm-hmm. But at the same time, that 12-unit building that I closed on a few weeks ago, that has started to vacate, which is awesome. People are leaving, and it's going well, and it's I'm going through that process pretty smoothly. But now I'm like, oh yeah, that's more vacant units that are costing me money and not bringing in money, and that I don't even know if I can turn my attention to start renovating them right now. I was kind of like okay with some of those people lingering a bit longer because I'm not even going to be able to address their units in quite some time. So, and then I'm signing mortgage commitments for that other purchase, that parceling of a bunch of different properties. And I'm really excited about that. So that's what's going on with me, man.
You got your new MKR business card?
Yes, got the new MKR business card. The Realty Group's going well, crushing it.
Oddly enough, I know I've been on pause for a long time. I wrote 2 offers for myself this week, which is a big thing. I'm back in the market. I'm not.
Neal's going to single-handedly save the real estate market.
I got this, everybody.
Yeah,
it's okay.
Offers all over town.
But I'm looking for a couple different things, but I think I've talked about it. I had some refis and cleaning up a bunch of stuff, and so can't help myself. I feel like the second the cash hits the account, I'm like, I can buy 4x what's in here because
it's also going to help support the boat and luxury vehicle market too.
Those are also in the works. I have some cool cars coming, hopefully. So I wrote an offer on. It was just a house, but it was in a great zoning area. So I was like, you know what? I want to try and get this.
Oh yeah,
I wrote a completely unconditional offer with a deposit ready to go. I got beat within probably 8 hours of it listing.
Yeah.
The other one I wrote on was a building close to other stuff that I have. And I offered him way more than I'm honestly feeling great about, but it makes sense for me because it's
on the same street, that one?
Yeah. And so I made an offer there. I'm waiting to hear back on that. And then I'm looking at some commercial stuff.
How many doors is that?
I'm not answering that question, Chandler.
He's not answering because he gave me crap about buying a 6-unit building.
Also, don't outstretch your arms. We're going to get copyright infringement.
Yeah. How dare you point? Pointing is also copyrighted.
It's 6 units, but it touches 2 of my properties. It has nothing to do with the amount of units. It's the fact that it literally touches 2 of my properties and is across the street from another one of my properties. It's in the middle of the wedge. But anyways, so working on that. Thanks, Chandler.
Good luck with it.
Next time you buy a single family home that's in a development area, I'll be like, yo, what's the point? So there's that. And then I'm working on some commercial stuff. Like I said, once I get those under contract or maybe firmed up, I'll explain to you guys what I'm trying to do there. But the commercial ones, as much as I'm like, I want to make a switch into commercial and kind of make this change, I'm feeling more nervous than ever because I'm like, well, if rates go up or the economy does slow, then I'm really relying on all these businesses to stay alive.
Commercial
is shop and I'm like, you're good. I know you will be here forever.
Commercial is amazing when it's rented, and it is disastrous when it's vacant.
That's my thing. Like, if this goes empty, like, what am I going to do? But the pizza shop takes 6% of the space in the building, so like, they're good. They're going to be stable, but I just don't know if they're going to be able to take.
Man, also you realize if you have a great tenant, right? Realize that every other landlord that has a vacancy within a half-mile radius of you is going to try to poach that tenant. Like, go downtown, man, and look how many of them just poach each other's major law firms every 5 years. Oh, we renovated our building. We're going to poach them. We renovated ours. We're going to poach them back. That's all that happens. And, like, I had a client. We were looking at an amazing property, and it was amazing because it had the best tenant in the town. The best tenant in the town. Like, federal money, you know, Crown Corp, like not moving anywhere. And we found out that they had already looked at a possible move. And someone else was trying to get them over there. Another landlord was trying to get them over. And it kind of freaked us out because they hadn't signed an extension. There was 2 years left. And, you know, you take literally the best thing about a place and put it in jeopardy. And then through discussions, we also found that, like, the little mom and pop operation in the lower level, she was trying to get out of her lease too. So it's like, oh my gosh, like, you know, how easy is it going to fill those spaces in a secondary market?
This is going to be a learning experience. The other thing is this is in a growing area where there's going to be new commercial buildings coming up in the area. And part of me is like, is that good because it's going to bolster my rent rate? Or is it going to be that I'm going to have tenants that want to bounce to the next nicest looking building because they're going to get more traffic to their business? Again, if you're the leasing agent for that new company, aren't you going to every single one and saying, we'll give for $2 more a square foot, you get a brand new building? Right? Like, I don't know. That's what I'd do. But for a pizza shop, it's not as concerning. He's going to stay.
Yeah.
It's not even on a 20-year. Anyways, that's what I got going on. I'm back making offers. Once I get a deal on the table, I will let everybody know, and you guys can check it out.
Awesome.
And we started putting spreadsheets on the Patreon, so take a look at that. This first one was a super high level one. I just wanted to we wanted to break into it, but like I've said a bunch of times on that video, we're going to break it down way more. And so if you're just getting into the game, if you start watching those, honestly, we should be able to get you from start to finish on a project if you follow all the videos in there, and you will know what you're doing. So take a peek, and I'd say, thanks for listening.
Yeah. Check out us next time, conspiracy episode. Boom.
We'll eat more Oreos.
Thanks so much for watching the episode. I hope you enjoyed it. If you did, press like. Don't forget to subscribe. But also check us out on Instagram and TikTok. You can find all the links below. Thanks again for checking us out.
When I was broke, I had rich habits. When I was broke, I had rich habits.